What's also incredible is, or perplexing with a lot of people, trying to understand what is AI, what is Nvidia, who's their competition, and how does that benefit my life?
Generally speaking, the stock market is now 15%.
Incredible story, remarkable, and I think that that's had more press in the last 12 months than probably any other stock that I can recall. It's certainly the black diamond in the Magnificent Seven. And just to put it in perspective, if you go back September 2023, it's gone from $40 to the peak of $140.76 back in end of May, jumped $100, incredible. And I think that what's also incredible is, or perplexing with a lot of people, trying to understand what is AI, what is Nvidia, who's their competition, and how does that benefit my life? One of the key things to watch at the moment is, and it's not just with Nvidia, it's other companies in this particular sector, is that although the earnings of recent days was slightly off, anything new or novel in the market is that what a lot of people forget. If you go back 40 years ago, the 50-inch TV was, everybody wanted one. Not many people could afford one because they were $35,000, $40,000. And I remember that because, I mean, I remember the pricing of brushes. And I think that those same TVs today are $2,000. So the big shift and the realisation of the pricing of Nvidia is, even though it's exciting and it's changing the world, and there's no doubt about that AI is the demand of sales going to take up and warrant and pay the price of the premium? If you think back of LCD screens or 50-inch screens, very few people could afford a $35,000 or a $20,000 or $40,000 TV back then, but everyone now is affordable luxury, we call it. So what the market now is trying to decipher is that, well, how much demand is there going to be to warrant the revenues, to make the revenues sustainable for them to adopt a multiple of earnings on the stock exchange, whether it's 20 times, in this case 30 to 40 times. So it all comes back to, no one's discounting, I think, the capability of AI just yet, but how much demand and how much will people pay to possess and use artificial intelligence. So that's where you are in the area of pricing, of the gyrations of the pricing in recent months. I mean, it's hovered, but it's down today to $106.96 as a close. And so that gives an understanding, and that's why we're seeing it, because it's so, at the same time, so exciting but so misunderstood. When you look at Nvidia, and then that's the best example we use at the moment, you might remember going back years ago, if you're fortunate enough, at Christmas or a birthday, a TV game. The first TV game I ever had was a ping pong tennis. It was just and it was two, and it was all in DOS, and it was a tennis game, and we just thought it was the best thing since sliced bread. And that technology then moved into home video, TV video games, Pac-Man, Space Invaders. So those companies back then, 20, 30, 40 years ago, were the innovation and the technology was very limiting. Most people had a Commodore computer and maybe a TV game. Nvidia and those companies now have advanced so much in technology, where those TV games now that our kids play, and I've got colleagues of mine that play it, they are so real life. The technology's advanced so much that you've got to do a double take in some of these games that my son has, that they're almost human. And so the technology has moved. So that's where Nvidia's come from, the gaming space, and the the data and the coding for that particular space has advanced so much with the chip market. The resolution, it's a bit like a resolution on a 35mm camera, opposed to the latest iPhone 16 or an SLR or a digital camera you'd buy today, which might cost you $3,000. The resolution you just can't compare. And so that's where Nvidia has been spawned from. The chip market has advanced so much in there, where a lot of this artificial intelligence has really come from the gaming sector and the gaming technology sector. The understanding of where the chips that process this will have the processing capability. These systems, the best way to explain it is it's the processing power. And in the technology, say that we've developed more on finance, is that it's building an expert system that uses all forms of data. The second is the data mining that data and pre-programming it, and then using mimicking to actually be able to mimic the data to come out with some probability based on algorithms, probability, historical data, and overall movements of the market. So Nvidia seems to be, for now, the best processing capability chip, and that their technology, I believe, from what I understand now, is the best in the world. So that's one form of revenue. The second form of revenue is the licensing of that chip and the use, not only from an individual, but for Google, Apple, Microsoft, all of the other competing, Samsung, and to be able to tie those contracts for not just 1 year use, for 5-year and 10-year agreements. It's a bit like a lease on a property. If you've got a lease for 1 year, it's worth either a 10-year lease or 20-year lease for the government. Valuation almost nearly doubles. So the technology they've got to keep up with, that's when there's been so much of a massive capital spend to keep ahead of this technology. And if you've read lately, they seem to have the best programming code in the world, paying them, in some cases, I believe, a good friend of mine who has close connections with the accounting of Nvidia in the US, 2.5 to 3 times what they're paying in Silicon Valley. And some people have been on performance bonuses and work until 2 a.m. in the morning. That got publicised just about a week ago too, after I've been told. And so it is a real absolute race to build the fastest, the best possible technology, and to tie down as quickly contracts between other alliance partners, i.e. Apple, Microsoft, etc. So that's just in a nutshell about what the chip is and what is the purpose of that. It's all about speed, processing, and involvement. The biggest concern in relation to the price from Wall Street, and from fund managers globally are different to how the Wall Street traders work, but the earnings was off, and that was a bit of a disappointment, and therefore it had been hit. I think last night it lost 279 billion off the capitalisation, which is one of the biggest hits on an individual stock in the history of capitalism. So that's something to note. I think that the other concern was how sustainable it is. And the realisation now is with institutions is, going back to what I mentioned earlier, is where are the demands going to come from? It seems the data, here we're going back to measuring data, is that the dashboard's saying from traders, the demand's there, but how many sales can we make? How much revenue can we make? Maybe we should be not thinking in quarters, maybe we need to be thinking in years. Having the best technology on planet Earth, I'll go to an extreme to say, imagine for a moment you have the technology that could remove all human intervention in anything you applied it to. The first thing to consider there is who's going to pay for it and how long will it take to be accepted, and people will part with their money at that price at that point in time. It's a slow burn. It's not month, quarter. The realisation now AI might be here and it's evolving, but ideally Wall Street would love to compress time, turn 5 years into 6 months. The reality is that they realise now adopting the technology in all different facets is going to take time. Now, hold that thought. It's a bit like the opening scene of Private Ryan in this space. There's bullets everywhere. Just when you can get your head around that, the biggest, make no mistake, and people got to understand, the biggest threat to artificial intelligence initially right now is governments. Governments, and we'll pick on the United States, they are petrified, and I know this from sources out of Washington and here, that the notion of artificial intelligence, not only from exchange, digital currency, crime, cybercrime, the obliviation of jobs. What does that mean? Job loss. I don't care what anyone says. People are saying the experts, the economists, well, new jobs will come out of it. There'll be a lag effect with that too. I think that the technology moving that fast, there has to be massive compression on employment across many different fields. So the biggest threatening factor at the moment is governments, employment, because income tax is their key winner. Tax overall. The answer to that is to keep a very close eye on the contractual agreements that Nvidia tie down, and who their alliance partners are for traffic, and the absorption rate or the take-up rate, and then trying to forecast and then some rate of return and determine a valuation. That's what I'm doing, is determining who gets into bed with Nvidia, who do they tie down, how tight are those contracts. The Department of Justice, if you read about that, which is an interesting article, just got latest press on that through New York, in relation to the allegations about the anti-competitive trust processes. Their government concerned about the exiting, once you tie in with an AI provider or a chip provider, about how do you get out, and the penalties that people pay or corporations pay to leave and go to another provider. So Nvidia have been very aggressive in this space. So, I think the key thing is to keep a very close eye on what government and regulation is going to do with this. I mean, I'm looking at government regulation, regulation effectively killed or partly killed Afterpay, and no one talks about Afterpay here anymore. And so I think for me, I'm looking at this company. I think the experts tell me that Nvidia is 5 years ahead of anyone else. Now, 5 years in my world is a long time. In the technology space, it's not. But the experts are saying they're at least 5 years ahead of the technology. So that's one good thing for them. determining on how the government regulates their policy going forward will be one thing, and also the contractual agreements, who they get into bed with. It's a bit like Dell with Microsoft and the alliance partners with other big manufacturers. I think that to me is, once you've got that, teaming up with those 4 or 5 major players, including Facebook as well, Google, Microsoft, Apple, um, that to me is where you can see that, because what happens is they leapfrog their forecast earnings on their alliance partners. That for me, and then trying to work out a valuation now is challenging, because there's been too much hype and euphoria about it's going to go to a $10 trillion valuation. I think that's, to me right now, who they connect with. That's for me, as an investor, what we should be looking at. Comforting thing is they are 5 years ahead. Are they overpriced? Time will tell. Time will tell. The market's now adjusted overnight. Where they are now, I think, is probably about right. It may be sub 100, but I think it's about the future. Who they team up with is going to be the next game changer. And once you've locked down that technology with someone like Apple, I remember when Apple came out with their first phone, and even I looked at it and I thought, who's going to pay $1,400 for a phone and then go into these long, lengthy contracts? It's quite expensive. When I had a flip phone, a Nokia phone, and Apple was 2.5 times that. Well, I wouldn't even think about going to another provider today. That's me. And the phone, every upgrade's $2,500. So, I think, from answer your question, I think the alliance partners, a lot of water going to the bridge. Who they end up, and you're in a game now where if some other provider that competes with Nvidia, and there's some North Korea, China, Japan, comes and does a better deal on commercial terms with another provider, time will tell. If that happens, Nvidia could go to $30. Big game of chess, yeah, indeed it is, and I think that, but it's certainly been. I mean, right now I think they're in fairly good shape. Again, we are now at the position where it doesn't matter what their earnings are. I mean, if they jump $5 billion in earnings next month, I don't think the market would move too much. It's about who they team up with. That is the key thing, who they run with. Those agreements now are in play now. I mean, with major players, and there'll be certain announcements that will brew. I think over the course of between now and March, you'll hear some pretty big names, some pretty big announcements come out about Nvidia. Right now is that the government's looking at them now to say, well, how. I don't know whether the Department of Justice will push their way, but they're now looking at you can't put screws on an individual or an operator or an SME corporation for 5 years plus and have these massive onerous penalties to get out. I think the government's really trying to protect. The consumer protection laws are in play at the moment, and I think Nvidia's just going to have to play ball. Long term, and I'll just close on this, is that the mid to long term effect of this AI is incredible. I mean, I was speaking to someone the other day, a friend of mine in Sydney, who does hip replacements in Sydney, and he does 15 to 18 hip replacements a week. And I went to school with him, clever guy, and he said to me that the technology now that he has is that now they're doing 35 as of March this year with new technology they've bought. So the capital cost is high. And what he said to me now is that he said it's interesting because the involvement I have now, hands-on, has reduced by 50%. Some people might say, well, so what? The technology in that space is moving so fast. In decision-making process on investments, for example, on what portfolio where you should invest $1 million over the next 5 years in blue chip stocks, Australia, there's programs being built, as our programs being built to manage, that you'll be able to subscribe to rebalance a portfolio without any control or without any intervention of yourself, to rebalance and re-rate portfolios. It's on autopilot forever. So stockbroking, research houses, advice, and elements of planning and financial services are at massive risk. They're at risk now. So that's one that I know well. Medical, so there's a lot of wonderful things, but you've also got to be able to navigate to what are the threats to your day-to-day business. That's one of the things I wanted to leave you with, and I just think that, so I'm very excited about it, but I can see the future, and governments are very concerned with the impact of certain industries.